Nestle Nigeria PLC reporting its full year 2023 earnings. Let's take a look at the numbers. Revenue, well, top line growth 22%. Cost of sales, there was a double-digit growth there. Gross profit looked healthy, and then you get to the finance cost, the loss before tax of 104 billion naira. I think there was a tax credit. They had a loss after tax of 79.4 billion, almost 80 billion. Let's get into it. Praise Ihansekhien is the head of investment research at Meristem Securities. She joins us to dive in. Praise, good morning to you. Thank you so much for joining us.
Thank you.
So, lots to get into here. I'll see how much we can squeeze in. Top line growth in terms of the breakdown between as far as revenue now. Food and beverage. What can you say about what Nestle was able to make for top line?
So Nestle's two main revenue segments, the food and beverage segment, like you mentioned, and the food segment contributes about 65% to the revenue, while the beverage segment does 35%. And then looking at what gave them the revenue, about 30% increase in the food segment growth, we can see that they increased prices of their products like Maggi and some of their major food products in that segment. So if you look at the revenue total revenue growth, they recorded of about 22%, like you mentioned. Most of it is coming from the price increase and not really from the volume aspect of it. So, I mean, there is some increase from volume, but we see most of it coming from the price increase and, of course, mostly from the food segment.
You look at the food crisis, you look at food inflation, higher costs. It's so interesting how all of this gets intertwined between businesses and individuals. Their finance costs, a 1,000% climb there, about 230-something billion. What was behind that? I mean,
Nestle's revenue, Nestle's debt is mostly owed to their foreign company in South Africa, right? So, and then of course, so when the FX devaluation happened last year, they saw the repricing of their debts upward, and then this led to the increase in the finance cost also, and then of course they recorded significant FX exchange difference losses on those debts. So that's what pushed it up.
When you look at, I want to talk to you about importation now. So expenses, so total about 420-something billion. But 67% of that is this category they had in their financials, raw materials and then purchases of consumables and something like that, 200-something billion. Talk to us about that.
I mean, I think that, first of all, you need to start from the fact that the consumer goods sector in Nigeria is mostly import dependent, so we have to import most of the raw materials that are used for production. And Nestle is no exception. They also have a significant portion of their import bill, cost of production that is, related to import bill. And that's where you see that jump in the cost of raw materials for 2023 full year. I mean, looking at it from the aspect of increase in prices on the global scene that we saw, for a while last year, and then of course also the FX devaluation that happened, combining those two things in Nigeria is quite precarious. Is a precarious situation for any company, to try to remain steady right now. So of course that's part of the things that affected their raw materials.
Okay, well, speaking of the foreign exchange, let's put the numbers up. I mean, the realized loss about 20-something billion, the unrealized loss about 170-something. So altogether, almost 190. So we are attributing this to the devaluation.
Yes, absolutely.
And we're seeing this across board for almost a number of consumer goods companies.
Yes.
Ouch. All right. So moving on from there, as far as let's say, I think we're going to go to the stock price, right? It struggled. This 10% down year to date, the 1 year figure of 30% or 8%, 2 year, 3 year over 30%. What's your long-term view for the stock?
Nestle is not very liquid on the stock exchange. You can, I think right now, as at yesterday, it was priced about 990 Naira. So it's not very easy for any retail investors to just pick up Nestle and buy. So that is one thing that already caps the ability of the movement of the stock on the exchange. You have to have significant capital to be able to buy Nestle. And of course, beyond looking at the financials in terms from the profit point of view, if you look at it from the cash flow point of view and the company's balance sheet, it's showing that Nestle is still not so healthy, but in a position from the cash flow position, it shows that it's still quite healthy to buy into Nestle. So in the long term, when they're able to get over some of these current challenges they're having, Nestle is definitely a company that would recover, from currently their shareholders fund is, negative because, Nestle is known for being a dividend stock. So, I mean, 2019, 2020, 2021, they were paying over 100% of the profit as dividends. So when the FX devaluation happened happened in 2023, they didn't have shockers, to help them. So I think there's going to be significant need for them to change their business model. Maybe not completely change their business model, but look into it to see where do we plug in resources from. And then, of course, we expect that the dividend policy would see significant change going forward because, it's affected them basically. So there might be some changes to Nestle's dividend policy.
And I guess the healthy dividends they've paid is part of the reason why investors hold on to the stock and it's not very liquid and they don't want to sell.
Yes.
Well, Finance 101, after tax profits, either your retained earnings or your dividends you paid. I saw something very interesting in the financial personnel costs. I just wanted to get your thoughts on this. About 40 billion naira or so. There we go. So salaries and allowances taking up 21 billion. What do you make of, after salaries and allowances, housing subsidies, 5 billion naira, and then, 20% growth, but their transport subsidies, a 65% jump there, 2 billion. What's are they buying homes for their executives or what? Help us out.
So Nestle, apart from priding themselves as doing good for the at Nestle good food, good life.
Right.
Apart from doing that, that's the tag. So apart from priding themselves on doing good for the consumers, they're also priding themselves on their how they treat their employees. So you see a breakdown of the personnel cost, and then you see all these things that we see there. And of course, we know what the transport situation in Nigeria happened, how it happened last year, and then you see, of course. First of all, the base is that inflation is a challenge for any company to face right now. If you are paying subsidies for maybe housing or whatever for your employees, it's very likely that a lot of companies repriced that last year and increased. In fact, there was a lot of increase in salaries across private organizations last year. So that's definitely where that is coming from. And on the transport part of it, transport significantly changed. The transport system last year in Nigeria significantly changed with the first subsidy removal. Yeah. So it's not far-fetched, to see that happen for Nestle also.
Hey, shout out to every company in Nigeria providing housing for their employees. We appreciate you for that. Okay, let's get to consumer goods firms in total and that raw material costs that we saw. So you import dependency. Is there any way that backward integration? We've been talking about it for years. Praise. When will it come to fruition? Where we'll ever see a day where the Nestle's, international breweries, and all these other consumers are now sourcing all their raw materials locally?
I like to maintain that no company is an island.
Right.
No country, is an island. And we cannot produce every single thing we need in Nigeria. There's a lot of backward integration policies going on. Nestle is very big on backward integration. They got something from federal government in 2016 for being, from the dairy sector. Yeah. And then, some other companies also, you have them, investing significantly in their backward integration. Now, there will be significant improvement in the next 5 to 10 years in backward integration in Nigeria, but I don't think that it's possible for us to source everything. But didn't they say that 5-10 years ago? They said 5-10 years ago that they said 5-10 years ago that there will be significant improvement in backward integration. We are not where we were 5 years ago.
True.
Take wheat, for instance. Yeah. You cannot grow wheat in Nigeria because in the conditions that we have. Atmosphere. So it takes a lot of you have to spend a lot on your machineries. Yeah. And there's a lot of collaborations going on with different organizations to try to see that happen. And there's been some improvements. This 2024, there's been some improvements. Still not up to where we should be, but the likelihood that in 5-10 years we'll see better improvements coming.
You just made an excellent point, though. There's from the political space and even the everyday management, people think that you can just grow everything in Nigeria and not import anymore. That's not realistic, right? I don't think it's not realistic. Right. It's not realistic. Because Nigeria want to export as well. I'm telling you, exactly. So who do you export to? Right, so if everybody did what you did, then nobody would export to anybody. Yeah. Excellent point. Headwinds is, maybe these two are intertwined. Is inflation and foreign exchange still the two biggest? Oh wait, what was my no? Is inflation? Well, either way, is inflation the number one headwind for consumer goods companies, or is it the FX situation, or is it both? What are the two big headwinds facing? I think I'll add a third. Yeah. Finance cost. Okay. Yeah. Okay. So we are in a new monetary policy regime. Yeah. And we are seeing that seriousness on monetary policy authorities to significantly fight inflation and bring in, raise the monetary policy. We saw 400 basis points some days ago. So that makes it a trifecta now
for companies to face. You're going to face the inflation. I mean, even the Monetary Policy Authority themselves said inflation is still going to rise for a while before they start to see it come down. Yeah. So for now, yeah, inflation is still a very big factor that consumer goods companies have to play. However, some consumer goods companies, you know, they try to buy some of their raw materials in advance.
Right.
So sometimes the inflation you see doesn't affect them immediately. You know, it takes a while for them to get there. Yeah. Of course, the exchange rates bit of it, while a lot of the things that the Monetary Policy Authority is doing is very good, we also need to see a lot of more push from the Fiscal Authority to actually see the exchange rates, you know, get to the point we want it to get to.
Everybody keeps making this such a good point. Stop putting all the pressure on the CBN.
Stop putting all the pressure on the
fiscal side also has to.
And I maintain, well, in my opinion, there are three things that need to happen. You need to expand the external sector, trade.
Right.
You need to, foreign Fiscal Authority has to do their own bit of it before the Monetary Authority. So I think the Monetary Authority is the third. Right. But it's not really the first.
Right.
So the pressure needs to go to expanding trade, opening up and getting more FX sources from trade and not just oil, from other sources, Fiscal Authority, then Monetary Authority, then we'll see exchange rate.
We were talking about headwinds. So we had inflation, FX, and then you mentioned finance costs. What about the purchasing power of the average Nigerian? Because NAFDAC is in a battle with the Manufacturer Association of Nigeria over these sachets, alcohol things, where they're saying they don't want youth to get, drinking those stuff, and the manufacturer is saying you're infecting the economy. Shrinkflation and what about the purchasing power? How is that as far as a headwind for consumer goods companies?
I was having a conversation with one of my somebody in the office, and we bought something, and then the price. when we made the next budget, we're like, okay, we're going to cut in half. Yeah. We're not going to buy the same volume. That's people in the office. Yeah. And then I started wondering, how are people that don't have so much, to go by, how are they surviving, these days? And I would say that purchasing power of consumers in Nigeria is under serious threat. Yeah. It's a very tough situation to be in for families, for households. You have to make critical decisions now. I think now we'll see more of spending on critical items and less on items that are not essentially necessary, on things that are considered luxury. Yeah. Eventually, so like the CBN said yesterday, we'll still see that inflation go up, and of course the purchasing power is likely to get worse. The situation is likely to get worse until we get to a point where like I said, all the other things I mentioned start to happen, and then we see the purchasing power increase, and then inflation rate starts to come down. Yeah. A lot of the expectations, speak to analysts, the Monetary Authority, Fiscal Authority, a lot of the expectation is that with some of the things that are going on now, we should see some alleviation in that by towards the end of this year and mostly 2025. And I tend to agree with that sentiment, because apart from even that, we have a very high base from 2023, which is going to affect the inflation rate for 2024 also. So putting that together, there would be some moderation towards the end of the year. But I mean, for right now, everybody has to
tighten their belts,
and
make
government
too has to tighten.
Of course, government has to tighten. Do everything you can to make sure that you are spending on the right things that you need to spend on. Yeah.
Okay, so with all that being said, Praise, what is the outlook for consumer goods? Is 2024 going to be, if we have you now we'll have you again definitely on the show multiple times to look at consumer goods, but when we're looking at Nestle's 2024 earnings and the international breweries and all that, how do you think the landscape would have looked? How do you think, is it going to be still tight?
Well, at the end of 2023, we did a report in Meristem to just, talk about what we expect for the consumer goods industry. And there should be some recovery, in very mild recovery, because the FX situation was very significant for them last year. We don't expect them to face the same gravity of FX situation that would have happened last year this year. However, bringing in the fact that there's going to be the pressure from finance costs, it might also still affect and shake them. But eventually, when you start to see inflation rates come down, there's going to be less pressure on their cost of production. Rates on the global scene and the prices on the global scene are gladly coming down. Their inflation rates are reducing, so this should also affect prices of commodities that are imported. However, the other aspect of it that would really determine everything is the exchange rate. Yeah. So with what the CBN is doing to try to tackle exchange rate policies, and of course, say we now start to see increased cutting of cost of governance. We saw the ORSA reports being implemented, and those other things. If we start to see that being implemented more, there should be some more elevation on the exchange rate, and of course, consumer goods would be better for it. But the situation is not like likely to be as what we had in 2022 and before then. There might be some mild recovery, but not very significant for consumer goods in 2023.
We could talk about this for a whole hour. Thank you so much for joining us. Very in-depth. And you guys at Meristem, you're doing great work. Praise Ihansekhien. Did I pronounce that correctly?
Yeah,
I love Edo names. You guys have great. There's a big election coming up in Edo State with the governorship in September. Head of Investment Research at Meristem Securities. Thank you for joining us. Appreciate your time.